Hey guys, it's that Dividend guy here coming at you with another dividend investing video. So today, there's been a lot of Warren Buffett in the news, and I just wanted to share with you what he's been buying and what he's been selling. So this is a list by Kiplinger that I found online. 18 stocks Warren Buffett is selling, and 6 he's buying. So he did major moves in the week that I was gone from YouTube. So let's take a look. This was made August 15th, so like 2 days ago. Let's take a look and see what the Oracle of Omaha has been doing. He hasn't done much for the first 3 months, but he did buy a huge stake in Dominion Energy. I believe it was part of the energy business, so he bought assets from Dominion. He didn't actually buy the company. He bought some of their pipeline, I believe, to enhance his own. So that was his first big deal, and it's one of the biggest deals he's done ever, and it's a big bet on the energy sector and a big bet on himself as well. But let's take a look at the other stocks that he either added to, trimmed, or he cut entirely. He made some big moves. And we'll talk about kind of how, kind of what I'm speculating and stuff like that at the end. So U.S. Bancorp, he reduced his stake. This is one of his biggest positions. He was big on banks for a really long time. So he reduced the stake. So the nation's 5th largest bank by asset in the Americas. It's one of the oldest Buffett stocks in the Berkshire Hathaway portfolio. The Oracle of Omaha initiated his position in the first quarter of 2006. So he has held this for 14 years. He did trim 1 million shares in Q2, representing a mere 5% of the overall stake. Jeez. He doesn't really talk about it a lot. It's not as mainstream as Apple or Coca-Cola, but it has been a very solid bank pick for him. And it's done very well compared to the other banks that he's held. He's consistently generated the highest returns among the top 10 banks, and it has delivered a total return of 84% since he bought it. Next is Liberty Sirius XM Group Securities A. He reduced the stake. Berkshire has found a way to own this stock in multiple ways, which I knew that. Another big holding for years. Held a stake in 2015. The company actually recapitalized, offering a different way to own shares. Investors enjoy performance. So he had actually invested in 2016, and over time he has bought more of the tracking stock, the overall body, which currently represents 70% plus stake in Sirius XM. Jeez. They did do a little trimming in Q2 of 2020. He let go of roughly 250,000 shares, but we'll see in a bit that wasn't his final word on the company. Charter Communications, he reduced his stake. It's cable TV, internet, and telephone and other services under the Spectrum brand, which is America's second largest cable operator behind Comcast. It's greatly expanded its reach in 2016 when it acquired Time Warner Cable and sister company Bright House Networks. Buffett entered it in the second quarter of 2014, but he has seemingly lost his love for the telecom company in recent years. His position has been trimmed down from 9.4 million shares to 5.2. As a Berkshire's recent filing, it included a 21,000 share reduction. This move away merged with a lousy 2018 for the stock, which lost 15% that year. He had a lousy timing in 2018. Buffett continued to sell his position during the first and second quarters, but the shares finished the year with a 70% return. Currently has a stake as a decent-sized 2.5% ownership in Charter and 1.3% of Berkshire's equity assets. Next is Visa, which I'm surprised. He reduced his stake in Visa. Warren Buffett took a bite out of his holdings in 2 of America's largest payment providers last quarter, so he sold Visa and MasterCard. Buffett, it was just funny. So he actually praises this stock a lot, like when he's doing interviews and stuff like that. He's previously said in interviews that he wanted to buy more. They initiated the position in 2011, and it's proven to be a mammoth winner, including dividends. Visa has delivered a whopping annualized return of 30.7% since he initiated his position. It's also a dividend growth machine, ramping up its payout by 150% over the past 5 years. If I had been as smart as Ted or Todd, I would have bought Visa. he said at the shareholders meeting in 2018, Berkshire's 0.5% stake in Visa doesn't even put it in the top 25 investors, though it's not insignificant. It's a non-insignificant 1% or so of Buffett's portfolio. Next, MasterCard, they reduced their stake. I'm not going to go deep into all of them, but I could have bought them as well, and looking back, I should have. But Visa and MasterCard 2018, so this is newer. Bank of New York Mellon, he reduced his stake. I'm just going to go into some of the M&T Bank. All the banks he pretty much cut. Wells Fargo, he cut a crap ton out of Wells Fargo, which I get. They've had a lot of scandals, and they just slashed the dividend a lot. Buffett sold off Wells Fargo shares in numerous quarters since the start of 2018. Most of the previous sales appeared to be a routine pairing on the position to keep it below regulatory 10% maximum ownership threshold for banks. However, Buffett dumped more than 55 million shares, or nearly 15% of his position, at the end of last year, and he booted 85.6 million shares, or more than a quarter of his remaining stake. So he's exited out almost 40% of the stock since 2018. So in 2 years, he's cut his position by more than a fourth, which is crazy. As a result, Berkshire, at a 5.8 stake, is now the former largest shareholder behind Vanguard and BlackRock. Berkshire Hathaway portfolio is no longer the largest Wells Fargo shareholder. Result, no. Yep. PNC Financial, which I'm not going to go super into, but does it say anything about it? Berkshire being invested in it's the sixth largest bank. So he was in pretty much all the big banks he got out of. He sold off heavily from this bank during the second quarter, and then included lopping off 3.9 million shares of his position. That dropped his holding to the company as well out of the top 10, with 1.3% of the bank shares outstanding. Buffett has long been comfortable with investing in the banking business. At the 1995 Berkshire Hathaway meeting, he said the industry falls within our circle of confidence to evaluate, but 2020's pain, the financial sector forced Buffett's hand. This one I was very surprised about. So JP Morgan and Chase is one of the most popular bank stocks, if not the most popular bank stock. I mean, it's very loved amongst dividend investors. They've done a good job growing their dividend as long as the economy's allowed it. So I was very surprised that he did reduce his stake. It's the largest, it's the nation's largest bank by assets. Buffett upped his stake several times after entering his position during the third quarter of 2018. He chopped 35.5 million shares, or 61% of the position last quarter, following a 1.8 million share, 3% trim during Q1 of 2020. So he's cut out 38.5%. Berkshire is still the sixth largest shareholder, JPM, in the first quarter's end, but has since dropped to 18th. Part of the original attraction of JP Morgan was Warren Buffett's professed admiration for the CEO, Jamie Dimon. The two have partnered with Jeff Bezos, chairman and CEO of Amazon.com, to improve coverage at lower cost. Buffett has teamed up with practice giving. Okay, so he liked the CEO and liked how the bank was run, and apparently it fell out of favor. CXXM, we already talked about that one. It's just same investment, different way to do it. Occidental Petroleum, not surprised he got out of this. He had such a bad time with this stock. He spent the better half of last year buying this stock up, but it appears he finally had enough, and it sold out entirely out of this company. Buffett invested $10 billion into the oil and gas company in late April 2019 to help finance a $38 billion bid for exploration and production. Berkshire continued to amass a stake over the next year, but apparently Buffett's strategy in the energy sector changed. First, he dumped Berkshire's stake in Phillips 66 in the first quarter, then bought natural gas assets from Diamond Energy for almost $10 billion in July, and now he's out of Occidental Petroleum, making Suncor Energy the lone energy component of Berkshire Hathaway's equity portfolio. The fact that Occidental was forced to slash its dividend earlier this year no doubt factored into his decision. At one point, Berkshire's stake represented 2.1%, making it the 8th largest shareholder. It's all ancient history now, so he completely sold out. I'm not surprised at this either. I knew he was going to exit out of airline stocks when the pandemic hit. So he exited out of all of the airlines. So it's Delta, just American, all of them. He's completely out of the airline industry, which I think is a good. I'm surprised he stayed in as long as he did. As we reported, Time Buffett got out of all four of his airline stocks last spring. Or sorry, jettisoned all four of his airline stocks last spring as the global pandemic caused the travel to collapse. I don't know whether 2 or 3 years from now that many people will fly as many passenger miles as they did. They may and they may not, but the future is much less clear to me. Collectively, Berkshire sold 147 million shares in all four air carriers: Delta, United, American Airlines, and Southwest. The stakes were worth a total of around $4 billion at the time. In the case of DAO, he sold off 71.9 million shares, Berkshire's portfolio, in Q2. As for the others, he sold 22.2 million of United Airlines. He sold 53.6 of LUV, and American Airlines stock was cut by 41.9 million shares. So he sold out of all the airlines. Buffett's original airline investments made back in 2016 raised some eyebrows, given his long-term disdain for the industry as a place where the capital goes to die. It looks like he was right the first time. And guys, this is really important because he, just like he said with the car companies, that's what he related it to. I watched a lot of Buffett interviews, but he's like, I couldn't have picked which one was going to be a victor, so I had to wait until most of them died, and I picked the one that I thought was going to be good, which was General Motors. He kind of did the same thing with airlines, so he didn't know the industry well enough, so he bought the whole industry. Is essentially what happened. And this is really important for newer investors as well, because if you don't understand how a business works or how it makes money or how it functions, if it's outside of your circle of competence, don't invest into it. Like, I know what my companies do. I look into them, I research them heavily before I ever put any money into them. But I try to buy like what I call like oh no duh stocks. Like Procter and Gamble makes stuff that I buy. Coca-Cola, I'm a huge fan of the stock and of the product. I love Coca-Cola. So, just as an investor, I feel like it's even more important to understand or to accept the things that you don't understand, right? Because then you don't make investments that you can't comprehend. So this is an example of where Buffett did that, where he just bought the whole industry because I don't think he understood it very well, or he at least didn't understand the economic effect something like a pandemic would have. Of course, you know, nobody could have predicted that it would happen. But when you're investing, it's very important to prepare yourself for all different types of situations. So keep in mind when you're choosing investments, like, think about it. Will people still do this if there's a global shutdown? Like, people are still going to buy Coca-Cola. People are still going to buy toothpaste and deodorant and mouthwash and pay for their electricity. There are certain things that you have to pay for, and there are other things that you choose to pay for. And that the airlines is one of those things. Like, you don't have to go unless you have to do it for your job. Most people don't fly. I don't. Most people I know don't. So that's something that people splurge on. So if you have a lot of money in that type of business or those types of businesses, you might want to consider scaling it back due to something like a pandemic. So circle of competence is very important. And even somebody like Warren Buffett can get bit by that. So if he can make that mistake, so can we. So just before you make an investment, make sure you do your due diligence and research it. And it's okay to admit that you don't understand the business. There have been companies that I've looked into and even figured out a decent intrinsic value, but I didn't understand how the business operated well enough, or I wasn't a big enough fan of the industry that the business was in, so I didn't invest in it. So I think it's just as important, if not more important, to admit what you don't understand and stay away from that, because if you pick the things that you do understand, then you'll make more money. So, anyways, didn't mean to go on a rant there, guys, but it's really important, because even somebody as seasoned as Warren Buffett can make a mistake like this, and he's a genius. So, anyways, guys, to the next one, Goldman Sachs. He exited out of Goldman Sachs. I do not know why, But let's take a look and see if they have an idea. Berkshire Hathaway has been hacking away at its Goldman Sachs stake for a couple quarters before unloading everything it had left. The holding company sold the last of its 1.9 million shares in the second quarter. Berkshire first picked up the stake in Goldman Sachs in 2008 during the financial crisis, which I think that's around when he got into most of the banks. But he paid $5 billion for preferred shares and warrants to purchase common stock. The preferred shares came with a dividend yield of 10%, almost twice the rate of the same some preferred stocks, which already are considered generous income plays. Goldman redeemed its preferred shares in 2011. Berkshire bought another $2 billion of GS stock when it exercised the warrants in 2013. Buffett parlayed the original investment into what at one point was $3.8 billion, a 5.1% stake in Wall Street's permanent investment bank that made Berkshire its fourth largest shareholder. But times change. Buffett is now out of Goldman Sachs, which is crazy. Next, Restaurant Brands International. He sold out of it, of course, because of the coronavirus. Not surprised here. It's a fast food powerhouse, and it's not like the restaurant business thriving in this age of coronavirus. So he sold out, just like the airlines. He sold out of this because of the virus. Kroger. This one was interesting because it's a little different. He added to it. So Berkshire Hathaway's stake in the supermarket titan Kroger, it entered it in Q4 2018, seemed like a sleepy pick. After all, many investors have soured the traditional supermarket chains given the emergence of Walmart, Amazon, and other competitors. Also, Kroger stood out as an old economy value play versus many of the more growthy picks Berkshire has made of late, such as Apple and Stone Co. Buffett nonetheless entered a 18.9 million share position at the end of 2019 and then added another 3 million shares, 15%, during the second quarter of 2020 to give him nearly 22 million shares. That makes Berkshire the sixth largest investor in Kroger of shares outstanding. It is only 0.37% of Berkshire's equity assets, but Kroger's 25% year-to-date return are no doubt been welcoming as so many of other Buffett stocks have floundered. So that was kind of surprising for me too. I was very surprised to see Kroger not being bought by him, but added to as well. It's very interesting. It might be one of those that I need to look into because I have looked into the dividend, but it doesn't have the status that I look for in the companies. But a 25% return is phenomenal. Next, we have Suncor Energy. This is the only energy stock that he actually has left. It's an integrated energy giant whose operations span oil sands developments, offshore oil production, and even wind energy. Also sells its refined fuel via network of more than 1,500 Petro-Canada stations. It also stands alone thanks to several other exits over the past year. This Canadian integrated oil company, is the lone energy stock in the Berkshire Hathaway portfolio. After trimming its position a little in Q1, Buffett added to it in a big way during Q2. Buffett bought 4.25 million shares last quarter to bring his stake up to 19 million shares. If this bet on Suncor sounds familiar, it should. Warren Buffett entered it during the fourth quarter of 2018. That marked the second time Berkshire Hathaway has taken a stab at Suncor. The company originally invested in the energy giant in 2013, then sold out the entirety of the position 3 years later. This one, just like Kroger, was a very surprising buy. So he added to his stake of Store Capital. So Berkshire's position in Store Capital, which was entered in the summer of 2017, was an unusual one. Real estate investment trusts, or REITs, a way to invest in real estate without owning the actual assets, have never been among Buffett's stock picks. Store invests in single-tenant properties, including chain restaurants, supermarkets, drugstores, and other retail service and distribution facilities. That is to say, Store is a bet on brick-and-mortar retail, which is thought to be in a prominent decline. Buffett, however, spied value and spied it for quite some time. Store Capital CEO told CNBC that Buffett studied the REIT for 3 years before taking his position. The Oracle in Omaha must have seen similar value rise in the company's February-March dip, which sent Store shares off by roughly 65% from the peak. Because he bought 5.8 million shares, or an additional 31%, to bring his stake up to 24.4 million shares, yielding 5.5% at current prices. Berkshire now owns 10% of shares outstanding, making its store capital's second largest shareholder behind Vanguard and BlackRock. Then we have Liberty, which are Sirius XM, which we went over that. This one's the one that's been everywhere. He bought gold, which let's see what they have to say. Warren Buffett is the furthest thing from a gold bug. It doesn't do anything but sit there and look at you. He's been known to say, but holding gold as an asset class isn't the same thing as investing in gold in a gold miner such as Barrick Gold. True mining stocks are sensitive to the price. However, whatever commodity they are digging out of the ground, but at least they produce something as in cash flow. In the case of Barrick, it even pays a small dividend. Besides, Barrick has more going for it than gold. It also mines copper, which is used in just about everything. As such, it's a bet on a return to global growth. Buffett picked up about 21 million shares in the second quarter. The stake has a value of $563.6 million. The Oracle of Omaha typically doesn't comment on his reasons for buying or selling the stock, but let's hope he makes an exception for this one. It would be fascinating to hear his investment thesis for the stock that's so sensitive to the price of so-called barbarous relic. So that's the one I'm really interested in because he has talked a lot of smack about gold. I've watched a lot of Buffett interviews where he laughs when they ask him about it because he says it holds no value. It doesn't make him any assets. But here, it doesn't. It's not an asset that accrues. You can't go to a grocery store, slap down a gold bar, and buy groceries with it. There's no cash value to gold or a gold bar. It doesn't gain interest. But he does get a dividend off of it. It's just interesting to see him buy gold. And the next is Berkshire Hathaway. He repurchased shares at $5.1 billion. Okay, so this one's a bit of a cheat, but Buffett did pour another big chunk of cash into another blue chip equity, his own stock. The firm bought back $5.1 billion in Berkshire shares during the second quarter. This is by far his favorite investment. Anytime it seems like he's buying something, he buys the most of his own stock, which means it probably was undervalued according to his intrinsic value because it got slammed from Corona, and I'm not surprised to see that he dumped money into it. The firm bought back $5.1 billion in Berkshire shares during the second quarter. That follows $1.7 billion in repurchases during the first quarter of 2020, another $2.2 billion Q4 2019. The most recent round of buybacks, Buffett picked up more than $4.6 billion in Berkshire Hathaway's Class B shares and about $486.6 million of Class A shares. That's a lot. It hasn't been the greatest investment so far. Shares of Berkshire have lost 2.6% over the course of the second quarter, a time when the broader market rallied by nearly 20%, and the conglomerate stock is down almost 7% for the year to date versus a gain of 4.4% for the S&P. Still, Buffett's disciplined as a disciplined value investor as there ever was, is practically shouting from the rooftops that he thinks Berkshire is a slam dunk bargain. So, overall, guys, he trimmed almost all of his bank position stocks except Bank of America is the only one that I think he actually added to that was a bank stock. He exited some positions, almost all the positions in the banking industry that he owned, he either exited out of or trimmed significantly. I was surprised to see he bought gold and very surprised to see that he bought Store. That was probably the biggest thing for me is he bought Store, which is very weird. I knew he owned it, but did not know that he bought some in Q1 of 2020. So anyways, guys, how do you feel about the moves? Are you surprised that he exited out of so many positions? Do you think he's justified? Let me know down in the comments. I think it's interesting. To me, I think it feels like he is saying that he's not really bullish on the overall economy due to the coronavirus. That's what that says to me. You only buy gold when you think that the economy is going to go down because it's a safe haven for your money. So you only buy bank stocks when you think the economy is going up because bank stocks rally during good economic times. But as you can see, they get slammed during bad times. So like during the coronavirus, they're getting slammed. So I'm not surprised to see that he's exiting. I am surprised that he's exiting so furiously out of those stocks because he's been so bullish on them since the crisis. But anyways, guys, what's your favorite Warren Buffett holding? Or what moves surprised you? To me, honestly, the store capital one is the one that really surprised me more than anything. But anyways, guys, thank you so much for watching. Remember to hit that subscribe button on my YouTube channel, That Dividend Guy, and when you hit the bell notification so you don't miss any uploads, I post a portfolio update every single day, and then I try to do more videos sporadically throughout the week. So thank you guys so much for watching, and I'll see you guys in the next dividend investing video. Take care, guys.